Good morning, nieces and nephews. It's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. The reason why Uncle Charles say unbiased is because this market can go either way right now. We are currently in the chop phase, something I have spoken to you guys about in the past, and I'll continue to do so. Are the two market phases, and the two market phases are the trend phase, which can look like this, right? When the market picks a direction and sticks to that direction, there are trend phases where it's bullish, and there are trend phases where it's bearish. And then after the trend phase comes the chop phase. This is where you'll get your consolidation patterns and structures, okay? And so far, this consolidation pattern that we have is a descending triangle pattern. Can the market break out or can the market break down? Whatever the market chooses to do, that is where I would bet the next trend phase will head next to, okay? Right now, we are still in the chop phase. We're still in the chop phase, which means the market has not decided where it wants to go next. If you talk to a lot of retail traders, they think they know where the market's going to go. They say the market go up, or they say the market's going to go down. None of them, none of us, including me, don't have a clue where the market's going to go next. But I tell you this is what I know. I know the levels, I know the setups, and I'm going to trade it unbiasedly, and I hope you guys choose to do the same. If that sounds good to you guys, definitely hit the like and subscribe button, because that's what we do here. Now, what are the levels? What are the setups? Descending triangle pattern. The range of the descending triangle pattern right now is, well, it's sloping down as you can see. Support still at 602. Breakout is now at 607. Okay, now 607 is important because multiple times it served, that's that yellow line right there, okay? So multiple times it served as a support, and multiple times it served as a resistance right around that 607 level. So, okay, that's the new updated level that Uncle is watching with you guys. The fib level is still valid, but like I said, I'm watching the buy and sell zone. 607 is a tough sell zone, and it's also based on the trend line. So if you're bullish, you need to see 607 clears, okay? So when you see 607 clears, I usually use a 15-minute chart, okay? So here's an example of 607 breaking down. Use a 15-minute chart. If it break down, you want to look to short, or if it break out, like there's a 607 breaking out right there, 30-minute chart, and you want to play it level to level, above 607 and have 608.4. Now that is a fib level, around 608.4. It's also a tough sell zone as well right there, okay? You guys see that? I'll change the color to yellow for the 608 level, okay? Right there, you see that? This tough sell zones all around at that area, 608.4. So you guys see the sell zone, 607, 608. You guys see why those two are my resistant levels right now. A bottom will be in if we can break out this consolidation pattern, if we can break above that Fibonacci level. 607 and 608.4 clears. Uncle Charles is bullish. I will favor the chop phase ends in favor of the bulls, and we possibly in the next trend phase, which could be bullish. Now, if we are to be bearish, the price action must tell us to, okay? I have support at 605, 603.5 now, and 602. 602 being the critical support level, the critical buy zone based on this structure. If it breaks down, the chop phase ends in favor of the bears. And boy, oh boy, we could be getting a much deeper pullback to the downside. Okay, so remember, what's the chop phase? The chop phase when the market's consolidating, building strength for the next move. So it's going to be trappy until we break the range. What happens when we break the range? We enter the next trend phase. Okay, so if we break above 607 and 608.4, give us that daily chart close above, intraday 15-30-minute chart. You want to look to long. That's bullish, okay? Especially if we get the daily chart close above, that's bullish. And if we break down 605, 603.5, and especially 602, bearish. The chop phase ends in favor of the bears. We don't have to predict. All we have to do is be unbiased. Wait for the trigger. Wait for the setup to play out. Enter the position. Whatever the price action tells us to do. This is what it means to be a sheep. We are being followers of the price action. Now, Triple Q it's not as simple. Okay, triple Q is not as simple. But if I zoom out a bit here, triple Q did hit a very critical level because I have a macro level, fib level. Okay, starting from July high down to August low. So give us these more macro level fib levels. And I had the 1.382 fib level around 534. We gotten a few cents shy of it, testing it. Okay, but that was a very critical level. Now the more, more closer levels, not as, more micro levels, I have is at 532, 530, and 528.6. Okay, if it is pullback time, I need to see those levels clear. Okay, we might see some consolidation, but the next resistance is at 534. I would be surprised if it clears, but this market just does what it wants to do. But if it does, if 534 clears, that is bullish with 536, 540 plus in play. But if it's pullback time, then we need the price action to reflect that by breaking down 532, breaking down 530, 528.6, 527 to put those lower targets in play. 525, 523.6, 522, and 520.5 would all be in play. We have a big gap all the way down at the 517-ish area. Okay, so there's reasons to go down, but we don't want to assume it's going to go down until we get those breakdowns. All right, Tesla, it just continues to go on up, but I do have next resistance at 441, actually 442. All right, next resistance at 442. That was last week's high. If it can clear, then we're just going to keep on going up high. Remember a couple years ago when Tesla had to get a split because it just went parabolic and went from like 200, 300, 500, 1400. Holy moly. We're at 440-ish right now, guys. And like I said, if 442 and 444 clears, we're heading up higher. I have support at 439. If 439 fails, 437.3, 436, 434, 432, and 430 would be targets that Uncle Chartist is looking at. Okay, remember, we need the breakdown of support, and that's the levels I'm watching. 439, 437.3. They fail, could get a pullback. NVDA, well, didn't get the explosive directional move I would have liked to see, but we did get it definitely an increase in volatility. You can see the candle from Thursday, December 12th. The high was at 138.4 and low was at 135.8. It's a $3 range. And then you see the next candle on Friday, a much bigger body red candle. Definitely increase in volatility. Will that volatility increase or stay where it's at and lead us to the next direction? Well, I have support at 133 and 131.8. If the next direction is to the downside, those levels must fail. Okay, those levels must fail. 15-30 minute chart close below those levels at least higher the better, and that should be the trigger to head down low to 130 or lower. If we get a bounce, trust no bounce unless 135, 138, and 140 can recapture, especially 140. But overall, still looking bearish. IWM, can we get a bounce? It did retested this critical fib level I had in the past. It was around 232-ish. 232.4. Let's see if it can truly bounce. Resistance at 234 and 236. 236 being a fib level. All right, if it clears, bullish, could send us up higher to 237.5, 239, and back to 240.8. Remember, if it's truly a bounce, it must reflect on the price action. RSI is oversold and all that happy stuff. Critical supports tested, but the price action must show follow through. Give us the trigger. Clear 234 and 236. It's bounce time. 237.5, 239, 240.8, possibly even higher than that would be in play. Okay. Now, if it's a dead cat bounce and 232.4 fails, don't be mad. That just means more downside is possible, not guaranteed, but at the very least, 230 and 228.6 would then be in play. We do have a gap right around that 230-ish area, so something to keep in mind, all right? Apple consolidating once again with some side-by-side candle after destroying the bears. Instead of a pullback, they've just been going sideways. building up a stairway. You guys know the phrase stairway up, elevator down. So if you are bearish on Apple, just remember the scenario of the elevator down, because kind of looks like that's what the bears are going to need. They're going to need an elevator down, which usually start with a massive breakdown of critical support with volume behind it, maybe even exhaustion gap. We're not getting none of that right now, guys. Okay, so don't just assume. Every time people call a top on Apple, they get screwed over. Wait for the right time. I have support at 248.5 and 247. If those levels fail, maybe it's time to go short. But you got to look at the context a little bit. Is there volume behind it? How did it break down? What's, there's a lot of things with this stock, okay? But if overall, though, the most basic thing is if those levels must fail. If they do, you want to play it level to level. But it would put 244, 241.6, 240, and 237.5 in play once again. But 248.5 is a fib level, and we did not clear it, technically speaking, last week. And we're above it. Could get a gap up. And if long as above 250, 251.5, and 253 are targets in play for Apple. Okay? Follow the price action. Amazon, well, after clearing the 226 fib level, 1.5 fib level, it backtested it last week as a support on Friday. And there was some buying pressure. Right now we're gapping up. So 226 remains the equilibrium level. As long as above it's bullish, I'd favor a deeper pullback if we can break that down. Now, next resistance at 230 and the fib level around 232-ish. If those levels clear, then the stairway up continues, okay? Right now, 228 and 226 are support. I can't favor a pullback unless those levels break down. Meta did break down some support levels, but it's trying to gap up right now, trying to invalidate the breakdown already. I tell you this, couple important pivot levels to watch was 623.5 and 621.5. If those levels can break down again, then the bears have a shot at more downside with 620, 617, and 615.6 or lower in play. But above 623.5, the bulls have a shot at a bounce, which would put 625, 628, and 630 in play. A bottom could possibly end if 630 clears. Microsoft still battling around that fib level, 23.6 fib level, around 449.4-ish. Didn't quite clear it. It's been trying, though, but it didn't get the daily chart close above. Now, if it's time for a rejection to get us out of the overbought territory, we need to see some strength from the bears. Breaking down 448 and 446 would put 444, 440, and 437.6 all back in play. We got to break down support. If we continue to consolidate like this with the bears not showing much strength, the sell orders up here are going to be absorbed for nothing. Okay? And if once they're all gone and the market makers decide to push the price up, there's not going to be much stopping price from heading up higher, back to 456 or higher. Okay, so watch that 449.4 level. DXY is consolidating after hitting a critical level, 107.1. If it's consolidating to get that breakout, 107.1 must clear. Give us that daily chart close to put 108 or higher in play. Can't trust a rejection there unless support fails. So I need to see why there's some little bit of buying pressure around 106.7 and 106.5, okay? Need to see those two levels fail to put 105.6 or lower in play. Coin looks like a breakdown, but there is some buying pressure once it got very close to that next fib level. I had around 306 and 304.5, right around that area. It got a little bit of a bounce. And now we're gapping up here. That's the thing about coin. It's so darn volatile. It's not for the inexperience. But I tell you this, once again, I have resistance at 315.5 and 317. If we can clear those levels, then more upside. Definitely possible. This gap up won't be a gap and crap. But if it is a gap and crap, then 314, 312, and 310 must fail once again to send us back down to the 306 and 304.5 Fibonacci area. Okay, This is a very volatile stock. All you gotta do is trade it unbiasedly. You can make money. If you marry an idea, don't respect your stop loss, you're gonna hurt yourself. Okay, this is not the stock to mess with. With certain stocks, when there's low volatility, you can afford to be wrong because of low volatility. This stock, high volatility. It will humble you. It'll either make you extremely happy or it'll make you extremely sad. Okay, so please be very careful trading a volatile stock like this. Doge, not getting the upside that I would like. It looks like it's breaking down that 40-cent area. That would put 38 and 36 cents in play with 34.5, well, 34.5 cents below. Okay, I can't trust no bounce unless it clear 42, guys. Do have 40 cents, might be good for a level-to-level move if it can recapture, but I'm not trusting any bounce unless it closes and clears, recaptures 42 cents. Bitcoin looks good though. Bitcoin looks good. It cleared a macro level, fib level. I have one at 100K and then one at 102K. It closed above it. 104K clears. Could be heading up to 105.1K. I have the next critical fib level at 111K. Wow. I bet the people long on Bitcoin's feeling extra happy. But anyways, I hope the sheeps are happy today. Get some volatility today. Let's see what the market brings us. Whatever it brings us, that's what we're going to eat, guys. We are not picky. All we need is a level-to-level move. The rest is extra. Peace.